Okay, Robert, no surprises, but two real estate brokers are going to tell you that the August real estate market is off to a fantastic start leading into what may be a busy fall 2024 real estate market. Is that a surprise?
Well, that's a surprise that you say that. I think that anything is an improvement over the worst time ever. That I do believe we passed through the bottom in July, and we are going to build for the very same reasons we said last month that people who have been reluctant to make a decision are losing their will to resist. They would rather buy a house than not buy a house. They could see an end to the um, interest rate peak, and they know in the near future it's going to go down, and they know they can refinance, and they don't see any dropping in prices. So what are they waiting for?
On this episode of Real Estate Chat with Robert Ede and
Jonder Perez.
we are real estate brokers. We work for Remax Hallmark. You can see that in the background, so no need to hide that. But we are reporting to you what's happening on the real estate market. In previous episodes, sure, there were questions of a real estate bubble, crash, burn, anything. Real estate haters looking for that moment when real estate will finally implode on all of us, prices will go down. And meanwhile, the rates have been dropping. There's another announcement coming up in September. Prices have remained steady, 0.9% drop year over year for the month of July is not the end of the world. There are buyers, sure, still sitting on the sidelines. Inventory is still up, but stabilized. And what Robert is going to show you is his analysis of what August is looking like. Now, recall, if you watched our previous episode, make sure you click like and subscribe so you never miss an episode of Real Estate Chat. Recall that July was a bump up, actually. And Robert, price-wise was a bit optimistic. That's okay. It wasn't far off from what he had predicted or forecasted. But why don't we jump into looking at how things are going, Robert? And let's start here with the net new listings because it's still a story about inventory, and we're going to talk about terminate-relists and all that sort of good stuff. Robert, take us away.
Okay, this is the behind the scenes story that explains the things that nobody seems to be able to explain because they don't know about this. Every month since May of 22, the real estate board has been reporting the relists, the properties that during the currency of a listing, the same broker, the same property, the same owner terminate the contract and then relist it. It comes through the system again and they count it again. So it counts as a new listing. Now, it can only ever count once as an active listing at the end of the month, but they count it again as a new listing. And the justification is, well, they presented it in a new way. The price was low, now it's high. The price was high, now it's low. My point is, how many times can it be bought? How many times can that be a sold listing and it's only one? So it can only count once. If you count it more than once, it's a do-over, it's a duplicate. So this chart takes what they call 31.9% relist share. Now, that is a lot. That's a third. If we, as I've said many times before, over or under reported prices by 32%, over or under reported sales by that amount, there would be a hue and cry and saying you're trying to cook the books and everything like that. Now, what that means in this month of July is there were 16,296 new listings. Now, if we take away the announced 5,195 duplicates, which is 31% of the whole, we get 11,001. So that's the number of actual new listings. And if you divide 5,195, the duplicates, into that 1,100 and change, you end up with something more like 46.8%. Nearly half of the net listings are duplicates, which they're reporting as 16,000. Now, one of the age-old guidelines that the real estate business uses is sales to new listing ratio. So they take the new listings and they divide the number of sales in that month into the new listings from that month, and they get a ratio which is either above or below 40%, 42%, or above or below 60%, 65%. And that's whether they call it a buyer's market, a balanced market, or a seller's market. So our first chart here, number 86, just does a subtraction. There's two lines running through the middle, which is the 5 and 10-year average of around 14. And the blue line is the gross, including all do-overs, that was announced. You can see it's come down from where it was before. A lot of people got fed up. June, July, nothing happened. Take it off the market. So instead of being, well, 16,296 is still 15% above the 10-year average, but it's better than it was. However, if you are actually a buyer looking, you will find a paucity of good properties for sale. Now, there will be ones that have got 3 tenants in them, and problems with the neighborhood, backs on a plaza, all kinds of things, and so you don't really want them. But a really nice house, there's a very, very few, because you look at the red line and you see that after you take away the do-overs, you got 11,000 new listings. You got sales of 5,400 something or other. And so there's far fewer sales than net listings than the average. That's what it is. The net listings less than the average is the conclusion that comes from this chart. We take it to the next one, which goes to sales to new listing ratio. And here's where we talk about buyers or seller's market or balance. So again, in the yellow is all the highlights saying 5195 terminates and relists are 42.87% of the 11,000 net new listings. Now, that is nearly half. It's ridiculous. They should be putting that metric on the front of the chart. They won't do it. Now, on our bouncy lines here, our squiggly lines, the black is the ratio of the 5,400 sales divided into the net number of listings. And that says that applied surprisingly similar. Buyer's market, balanced market, it's in the middle. It's definitely less than 62%. It's definitely more than 42%. It's in the middle. Whereas the standard way of doing it, where you count everything a couple of times, it says it's gone down to 33%, which is a very buyer's market. If things were terrible, we would have a sales to listing ratio of 30%, meaning for every three that came on the market, one sold. And that's not the case. It's nearly 50-50 at 48-56. So
question for you, Robert. So
yeah,
I mean, logically, that makes sense that you can only sell a property once. Therefore, a terminate relist done 3 times should still count as one.
should
And
only count as one. Yeah,
yeah, and clearly the point of view is being skewed here into buyer's market, because if it counts as 3 or 5 or 10, and it only sold and then the properties only does end up selling one, then it's a 1 to 10 of those listings,
that's right.
right? And so is
It's a disrepresentation of the market.
yeah, and then so how the sentiment of the market is gauged. Now the question was,
Yeah.
out of the different metrics for absorption rate, there's also months of inventory, which you may get to later on.
Yes.
Between the two, as a realtor, practitioner, real estate professional, and as a consumer buying, selling homes, which one of these would be the most accurate to follow to gauge the heartbeat of the market?
Okay. The whole market is the whole market. That's the sense. It's like saying, how's your love life? This week it may be great. Next week it may be lousy. So the months of inventory I used because the sales to new listing ratio had become useless until we've prompted the board to put a statistic about the relists. So the months, I would say, is the only thing that's always been reported, always been the same way, and is a snapshot of what happened at the last day of the month, one divided into the other, and I think the best indicator. And we also have that going back for a long time with the same data from the same people at Toronto Real Estate Board. And the magic, which we'll see if we get to that one, is that we've broken through 4 to 4.5 months of inventory, where before we thought 3 was kind of buyer territory. And when we had 4 before, it was lousy. So we know that July was lousy, and that's what these stats are from. August, it seems that a lot of properties have been withdrawn from the market. There have been a few sales, the cheapest ones, the ones that have been on the market the longest, that the owner's beaten down the price finally to, okay, I'll sell it for that. Okay, I give up. And so buyers are nibbling away at the bottom. And what else would you expect them to do?
Oh, there you go. So let's jump here to the distribution of the different areas, because that makes a difference too, right, Robert? I mean, where you're buying, and mind you, this is in the 416 and 905 areas. So what's the breakdown?
Well, we've broken the 905, which is unfair. It should really have 10 different areas to west, because that's how it was introduced, north and east. East is it's a small segment. North is the bigger segment, and then west, because it's so huge, all of Mississauga, all of Brampton, all of the Western Territory, it's huge, but it doesn't have the volume that 416 does, because the density in 416 and all those condos always adds up to the greatest number of the greatest percentage of sales in the whole. On balance, if you add up the percentages, that there's about 40% every month that sell in 416 and 60%, 60-40, that sell in 905. But that's a huge, big, unfair comparison. You can't say one's good, one's bad, but there is a difference. We saw the difference in the peak, when the peak came, what the price of the peak was, and we also see it now in the mix of, because there's fewer built condos in 905 and fewer and more detached as a ratio, then that's where their attention is being gobbled up now. Nobody's buying condos there. Nobody's buying condos in 416, but the detached, and it's been the same old thing. If I can't get what I want in Etobicoke, then I go to Mississauga. If I can't get it in Mississauga, then I'll go to Milton and the other side. If I can't buy it in Don Mills, I'll go to Scarborough. If I don't want to live in Scarborough, I'll go to Agincourt. If I don't want to live in Agincourt, I'll go to Markham. So it's always been that way. We just move a little bit further to get what you want at the price that suits your budget.
There you go. Now looking at the monthly prices comparison between 416 and 905 area, what do we find?
Well, we break it down, and this, for the first time in a little while, the 905 price is higher. And I think that's partially a mix of the properties are more detached, semi, in freehold, let's say, in 905. And it's gone back and forth, back and forth, back and forth. So for it to be up 2 or down 3, it doesn't really matter. If you tried to plot each and every one, I've got a summary over there that is too long to read. But in both cases, we are 12 to 20% off the previous peak. The 905 peak, that blue at the top, 1402, was by and far a higher peak, and it came earlier than we saw in 416. And so they're off by more because they had more to go down. We're fighting back and forth, 1 plus, 1 minus of the average of Toronto at 1.106. And if you look at the two averages, they're very similar.
And the interesting thing to point out too is because, I mean, when you're looking at historically where the 905 started, and I guess during pandemic period, because it was so affordable and because of work from home, that's what drove like the insane amount of demand upwards in the 905 area, whereas 416 has been pretty stable. So even though there is a disparity between the two, it's fair to say that 416, Robert, will still be stable on a consistent basis moving forward.
Well, that's the rock. And so the rock doesn't vary as much as the sand on the outside. But, why did it go up? Because there are fewer condos and more freehold that are built in 905. There was a lot of people buying spec out there. And also, 416 was lunatic enough to put in a double land transfer tax. 905 does not have a second land transfer tax, which is a huge cost. Should be paid by the seller, quite frankly, or at least an element that's negotiable between the buyer and the seller. Eats into the down payment of the 416 buyer.
There you go.
Sales, okay, we see that they're both 30-35% off where they should be. And we know that. Sales are there. Sales are not setting any records. Sales are not at the worst they've ever been, but they're in the doldrums. Yeah. But it's the summer. Okay, overwhelming, it's the summer. Now here's the table we refer to. The board puts this out, but does not publicize it. They put it in this stats menu that only the members can get from and look at. And anyway, so here it tells you the way they look at it. 31% of the new listings are relists.
Oh, good to point
We
out
said enough about that.
Well, I mean, there are some too that you're looking at 39.7% in Aurora. I think that's one of the higher ones. Like, okay, and in ESSA, there's 39.7%. So imagine almost half were terminate-relists. I mean, that just is a major skew on numbers. Let's talk about August and where August is headed based on, I know some of our real estate chat viewers, this will completely go over you, but Robert's going to guide you through this so that we can decipher what's our gauge of what's happening with the August market.
Okay, well, I've been running a chart like this because at one time there was two MLS systems running in parallel, one called Stratus, which had been going for a long time, and one called Realm, which had been running sort of in the background for 2 years, and now it's taken over. And is the only source. So now we have the only source, and rather than all the bottom half of it is comparing the difference or similarity between the two of them, but what this is now doing is comparing where were we now, last Friday, in this case, yesterday, compared to 2 months ago. And the scale's not on there, unfortunately. Okay, so I've broken it down into a couple of different areas. First area, just because you can only have 10,000 in any one group. First one's Halton Durham. And so then the first one is all properties in Halton Durham. The next one is condos, and then the change from this listings from 60 days ago. So there's more listings condo than there were listings freehold in Halton. The next group is different, but there's only 132. It's too small to even worry about. The next one is Peel York, which is huge, and the condos are up, 8.8 to 5.3. Doesn't sound like a lot, but it's almost double. The number of listings in condo has gone up by more. Now, 416 is the next one down, and they're -2% plus 3%. Who cares? It's no real change has occurred in the volume of properties. Now, I'm sorry, I got that without the headings, it makes it difficult even for somebody to put it together. It's bold because that's the condo, and it's red because that's the freehold. There's 10% less listings than there was 2 months ago, and 3% more condos than there were 2 months ago. Is that a lot? Yes, it is. It's 200. Is it making any difference? No. We're not crying out saying, "Oh, gee, I wish the condos were selling. Oh, gee, I wish there was more freehold." There's plenty of listings.
Plenty of
So
listings, which is what buyers were looking for, right?
they were
Now,
looking for that, and now they want lower cost of financing and lower acquisition costs. And I can't blame anybody for wanting to have a better deal, but you got to find someone who's on the other side of that trade. So this is our composite thing. Again, this is page 81. It's been going for a while, that where we compare the number of listings today was 96% of the maximum we've seen in the last 2 years. In the last 24 months, it was 162% of what we saw, average, 126% of the last 6 months, 105% of the last 3 months, and 99% of this most recent month. So there's the maximum number of listings that we've seen in the longest time, because most of those times were boom bust, boom bust. Condominiums listings 45%. 416 listings 39%, which is sort of normal, 60-40. When we come down to the sales, it's showing 70-30 in favor of condos and 70-30 in favor of 905, which, if we say that condos are having a tough time, seems to be true.
all right. So leading into fall 2024 real estate market, when do we start to solidify that it will be a strong fall market for our real estate chat viewers who are either, you're a buyer, you're sitting on the fence, you've waited this far, and of
Yep.
course, our main advice is do the right thing for you. So if you're not certain, doing nothing versus making a mistake, jumping into it. But with real estate, it's all about longevity, as long as you're buying within your budget and you know what you're doing. But advice for buyers, sellers, as we round the corner into fall.
Okay, first is don't listen to anything you see from people who are not in the real estate business. The banks always come out with a monthly summary and their comments on what the Canadian Real Estate Association put out. Do not worry about what the national average is or the change in national, because if it goes terrible in Vancouver and terrible in Toronto, Calgary's hot and the rest is mush, like, what are you going to get? You're going to get a mush of an answer. It doesn't tell you anything. Only pay attention to what's happening in Toronto, in the Greater Toronto area. That's all reported by the one board, Toronto Real Estate, Greater Regional Real Estate Board of Toronto. And don't pay attention to somebody who has a vested interest in some component of the business. If you are a residential customer, meaning you are looking for somewhere to live, or if you are a small time investor, you're looking for something that's got 2 or 3 apartments, and you're going to live in one and rent the others out, or rent the 3 of them out as investment rather than having your money in the gambling casino of the stock market, then you're only looking at residential. You don't care what plazas are doing. You don't care what office is being converted to residential. You don't care what's happened to the exhibition. You don't care about anything about new construction. You don't care. All you care is about the amount of money that you have and the areas where those type of homes are available, properties are available in the price range that you want. So you've got to start watching those. You can get any member of the Toronto Real Estate Board to put a monitor on it, put it on Prospect Watch or whatever they call it now, so that you can be fed every night with what's new, and you just watch it. All you have to watch for there is sometimes the seller puts it on an artificially low price and says, I don't want any offers for 10 days. And then at the end of 10 days, sometimes they are successful and sometimes they're not. So that's the only thing you have to watch for. And anything that's good, go look at it. You can drive by the outside, but if you're actually interested in it, go see it. Go see it. Put your feet on the ground, see what the backyard is. What's in the backyard? Is there a gas station, or is there a beautiful swimming pool and a vista that goes for miles? Anyway, so go and see it. And sellers, take a very extra hard look at what everything is going on in your neighborhood. I think you're going to find that some of the people who were for sale and withdrew in June are now returning, some of them at more, some of them at less. And the people that seem to be most desperate in July have now said, hey, I'm not giving away. I'm going to sell it for what I need or what I deserve or what I must have, depending on whether they bought already, whether they're, last time seller going to, retire on that money or whatever their circumstances. So the worst, I believe, the worst is over. People are now talking about accelerated rate reductions, that we should have 2 more this year and 4 next year. Now that's a lot. That's 2%. We needed a magic 3.5%. That's going to be 2% of it. Unfortunately, that means that there's enough CPI and unemployment and stuff like that, bad news, that the government of Canada and the Bank of Canada governor is saying, oh, I can't keep it up where I'd like to keep it up. I'm going to have to bring it down because the effect of my holding up the interest rate is killing everyone. And so they're reacting always slowly, always too long, too late. But we've weathered the worst of it, is what it comes down to, in my opinion.
The worst is over. So
Yeah.
sales will pick up, inventory will pick up, but along with it, there will be more sales
Well,
too.
no, the inventory is not going to pick up, because where's it going to come from? It's going to come from grandma's going to sell her house and a few more estates are going to process. Yeah, it's nothing like we
It's
saw.
okay. So it's at the highest it could be at this point. It's
Yeah,
just absorption from here then, I guess. It's sales
that's
from here, and prices, average price should go up because, I mean, more expensive properties will sell.
Well, there's gonna moderate, so there's gonna be a moderation, but the glut, we've seen the most of the glut, and I said all the way along from the fall or the spring of last year that I thought the glut was going to happen in May of last year. It didn't happen. That we saw the glut now,
Mhm.
but people were more resilient. The condo pre-sales, those people are bailing. They're trying to sell. They're trying to assign. They're trying to get out of their deals that they bought 5 years ago and into the future. So, but that was always a gamble. It was always an investment. So sometimes you win on an investment, sometimes you don't.
There you go. If you have any questions about the upcoming fall 2024 real estate market, reach out to us, put into the comments what you thought about this episode. And make sure you follow along so that you can watch future episodes of Real Estate Chat. Wishing you the best as you navigate the upcoming fall market. Thanks for watching this episode of Real Estate Chat. Take care and bye for now.
They've been saying back to school. Can you believe it?
A few more weeks.
There's ads all over the place. Back to school. It's just left. I love driving around in no kids time. I just love driving around with no traffic.
What a short summer we have.
Yeah.
All right. So enjoy it, Real Estate Chat viewers. Enjoy it.